Welcome to HDFC Securities 5-minute market wrap-up, your weekly guide to events in the market for the week ended 27th October 2023. In key macroeconomic news, US GDP expanded at an annualized rate of 4.9% in the third quarter, well ahead of the 4.7% estimate. China approved increasing its fiscal deficit from 3% to 3.8% of GDP, entailing an additional debt of $137 billion. This additional debt will primarily be used for supporting regional governments. European Central Bank held its key interest rates steady after 10 consecutive rate hikes and signaled again that it is closer to ending its rate hike cycle. US Composite PMI rose to 51 in October 23. Both the services and the manufacturing PMI rose, indicating continued strength in the US economy. Nifty fell for 6 consecutive days before rebounding on October 27th. Nevertheless, for the week, the Nifty ended 500 points lower, or about 2.53%. The broader markets also fared poorly as the small cap index corrected by 3.4%. There were no sectoral gainers during the week. Among the sectoral losers, the Nifty Media, the BSE Telecom, and the Nifty Metals were the worst performing, with falls of anywhere between 4 to 5.4%. In select market movers, BSE shares rallied by 15% after the exchange revised transaction charges on equity derivatives. Credit Access Grameen reported a 98% year-on-year increase in net profit, boosting the shares by 11%. Suntech Realty shares fell 16% after the company reported a net loss. Phenolics Industries shares also fell 15% on the back of a revenue decline of 6% in the second quarter. FII's net sold Rs 13,200 crores of equities in cash. October is likely to be one of the largest net sale figures from FIIs in quite a few months. DIIs continued to support the markets, buying 11,553 crores of equities in cash. US markets also witnessed a sharp correction. The S&P 500 index was down 3.8% for the week, and the Nasdaq Composite fell by 2.6%. Both the S&P 500 and the Nasdaq Composite are now down more than 10% from their recent highs reached in July. In this section, we discuss select reports published by the research teams of HDFC Securities. Balkrishna Industries results were in line, but management now expects FY24 volumes to marginally decline year-on-year. We retain a reduced rating with a target price of Rs 2,201 per share. Kajaria Ceramics saw cost savings drive an earnings rebound. The EBITDA margins expanded by 400 basis points year-on-year to 16% on the back of a sharp 68% cool-off in gas prices. Consolidated EBITDA and adjusted PAT rose 39 and 47% year-on-year. We have increased our price target to 1,470 rupees per share and retain a buy rating. ICICI Bank delivered consistent loan growth of plus 18% YOY and lower credit costs. Net interest margins softened by 25 basis points quarter-on-quarter to 4.53% and are likely to trend further lower. We retain our SOTP-based price target of Rs 1,190 per share. Havells India under-delivered as revenue grew by 6% against our expectations of 11%. Nevertheless, we trust Havells' superior execution once the industry tailwinds kick in during the second half of FY24. We marginally cut our target price to 1,450 rupees per share, but retain an add rating. Our retail research team came out with a report on Vedant Fashions Limited, which is India's largest exclusive wedding and celebration wear player. The key growth drivers for Indian wedding and celebration wear include rising disposable income levels, urbanization, multi-day and multi-event wedding celebrations. We assign a base case fair value of Rs 1,445 per share and a bull case fair value of 1,555. We expect these price targets to be achieved over the next 3 to 4 quarters. That is all for this week. Please do refer to the detailed disclaimer on your screens. Please note, securities discussed in the presentation were for education and information purpose only. Thank you.